Welcome back, guys, to another video. There's a lot of information out there circling the net, circling media outlets that says that there is a real estate market crash around the corner. There's a real estate market crash coming in 2022, or there's a real estate market crash happening right now. And if you're a buyer or a seller looking to either buy or sell for your family, all this information is very, very confusing and creates a lot of doubt in people's minds. So in today's video, I'm going to share with you live, accurate, and relative data after these rates hikes have happened. This is local data in the local real estate market that will show you and help you understand what is the buyers and sellers buying and selling psychology in today's market, which is the biggest factor in supply, demand, and home prices. And you want to stay till the end if you really want to understand this buying psychology if you are an active buyer looking to buy a house right now. So let's get right to it. So up until today's time, which we're shooting this on May 12th, there have been multiple rate hikes by Federal Reserve. I mean, rates at the same time last year were sitting somewhere in the high twos, and right now on average it's about 5.5% for a purchase loan. And on average, mortgage payments have gone up 40% throughout the country. So that's a big jump for a lot of people. So now let's get right to the board and look at some local real estate data to see what the numbers look like and what buyers are paying and what that's doing to the inventory. So let's get right to it. We're going to look at two different cities today. Instead of doing one, I'm going to compare two different cities. We're here in the East Bay area. We're going to look at the city of Fremont. And we're going to look at the city of Livermore. Now, both of these cities are about 18 to 20 miles apart. Not completely different markets, but different data we're going to look at here. One market has a little bit of a lower price point. The other has a little bit of a higher price point. So it's going to give us an understanding of what's happening. And it's going to give us two different sets of data points to look at in this interesting time when the rates have gone up. So let's start with Fremont. So we're looking at the month of April this year, and we're comparing it to last year, April 21. So as you can see, active listings last year were 76, and this year active listings were 82. Now, active listings are homes that are sitting on the market that have been listed and have not been sold yet. That's what defines an active listing. And then we have sold. Last year, 149 homes sold, and this year, 130 homes sold in the city of Fremont. Now, average sales price, this is a really interesting one. Last year, the average sales price was $1.61 million, and this year, after the rates have gone up, the average sales price is $2 million, almost a 24% jump on average sales price. And then you have days on market. This is when the listing comes on the MLS, and then when it sells, right? Or goes off the market. So you have 7 days last year, and then you have 8 days this year. So not a big difference there, okay? Now we're going to move forward to Livermore, and then we'll make some conclusions here. So again, same thing, April 21 last year, April 22 current this last month. So active listings, 69, and active listings this year, 78. Then you have sold, 142, and 113 this year. Then another interesting, again, very interesting, average sales price, 1.2 million last year and 1.49 million this year. Pretty big jump there. Relative to this, yes, almost a 25% jump right here. Very relative to what we saw in Fremont. And then days on market, 6 days from the time it comes on the market and time it goes into a pending status, and 8 days this year. So not a big difference there, even after the rate hikes. So take a look at these graphs. The top graph is for the city of Fremont, and the bottom graph is for the city of Livermore. And this data was put out by the Bay East Association of Realtors. And as you can see on the top graph, or on both of the graphs, the properties pending and sold drastically dropped in the months of January, February, and some parts of March. And then you saw them kind of come back to normal levels, or definitely higher numbers in the months of March and April. And this is a direct correlation with what was happening in the mortgage and rate market, where the rates had gone up drastically in those months, and you saw the market was starting to adjust. And as people adjusted, you see directly here that on the graph that the numbers went down a little bit. So after looking at that data on the board of these local cities, which I'm sure this data translates to other cities in this country. Now, some markets may be different, but these cities that we talked on the board are desirable cities to live in here in the East Bay area. Livermore falling in the Tri-Valley area, still falling under the East Bay area. And Fremont is like dead center in the East Bay. So, after looking at the data, there are three main things that are happening in the real estate market locally. Number one, we are starting to see more inventory servicing in the market. And that's a great sign. We're nowhere near equilibrium yet, but this is going to make it more fun for buyers and us real estate agents representing buyers and sellers, because when you're in an equilibrium market, it's just you're able to get a better deal. There's not a craziness happening. There's not a frenzy of everyone's butts on fire. So I hope we can reach that, and we're starting to see more inventory. And one of the reasons, which is the second point, is the buyer pool is starting to deplete. But another reason also that is a factor is a lot of sellers are starting to put their homes on the market, maybe of a scare of the market slowing down because of the rates going up. So you're starting to see that. So I'm hoping that inventory continues to rise and we can reach an equilibrium. Number two, we are starting to see the buyer pool, the demand starting to dwindle a little bit, because a lot of buyers are just point out either priced out, they can't afford it, or if they can afford it, they're just not comfortable with that 30-40% increase in their payment, and they're deciding to rent or hold off as these rates have started to rise. And number three, due to this happening, you're starting to see less competition in the market. So we are starting to see buyers able to negotiate. Now, not negotiating on price, as you can see, buyers still are paying top dollar for these houses. So not a lot of price negotiation happening, especially in markets that are desirable. But you're starting to see buyers negotiate some things on the contract, maybe are able to add some contingencies on the contract, whereas a couple months back or the year prior, you were just submitting non-contingent offers and just crossing your fingers, hoping to get it accepted. Now, the question of buyer psychology, as I mentioned in the beginning of the video, buyer psychology is a big factor in determining what happens in the market. Usually when a change happens, like the interest rates going up, or 2 years ago it was COVID, we are herd animals, right? We like to follow the crowd. So as this starts to happen, you saw in January, February of this year, kind of the numbers starting to go down, market slowed down a little bit, and then again, you start to see this come up. So as you can see the numbers right here for April, it clearly tells you that buyers still have a lot of confidence in the real estate market, because they continue to pay asking price, or in some cases a tad bit higher than asking price. As you saw here, that in both cities, the average price actually increased in April when compared to last year. So even with the rates going up, buyers still have confidence in the market and are paying top dollar for homes, just because everyone needs a place to stay, and a lot of people still have confidence in the real estate market. If you are getting value out of this video, please share, like, and comment, because that puts a smile on my face. And when you hit the like button, more people on YouTube will be able to view this video that are out there looking for homes. So thank you for watching, and I love you all. So now let's talk about some pointers that are happening outside of the real estate market, because this whole economy is connected. And if we're going to talk about a market crash in real estate, we need to also look at what's happening in the market. So number one, there is inflation. It's almost touching 9%. Your buying power is starting to go down, or it already has. Things are getting very expensive, groceries, gas, you name it. Everything is very, very expensive. And number two, we have a strong job market where there are 2 jobs for every 1 person. And if you're looking for a job, it's easy for you to find a job. It's a bad situation for employers, but a great situation for employees. And then you have the feds who are trying to control this inflation and are declaring that they're going to do everything in their power to get a grasp of this inflation that has just gone crazy. And what they're indicating that most likely there will be more rate hikes happening in the near future. There are a couple more Fed meetings left before the end of the year. A lot of people are predicting that the rates might be in the high 6s or even around 7%. But there's also news that if we can get control on the inflation, the rates may come back. So I feel that we're going to maybe experience a slowdown or a decrease in GDP as consumer spending slows down. We may see 2 or 3 months of a GDP slowdown or decrease in GDP, which by definition is a recession. So it's very important you check your data and sources when you're looking at data out there before believing in a doom and gloom theory wholeheartedly. So like I said, by definition, that's a recession, but does that equal to a market crash? I don't think so. But as history has told us, over and over again, that usually when a bubble bursts, nobody really knows until the bubble bursts, right? So you want to stay informed and you want to understand and know the data and understand what the source is before you believe anything. If you are in the market right now looking to buy a home and are indecisive, check out this video to help you decide if it's a good time for you to buy now or wait. I hope this video was insightful. Like always, this is Karan saying with Optimal Homes.